And now to business news here. There aren't many ways to make an ordinary, or rather an already difficult situation worse. But imagine emerging from a COVID-19 lockdown only to be thrust into a war between major commodity producers. The conflict disrupts the supply of wheat, oil, gas, fertilizers, and other essentials, sending macroeconomic shocks, rippling across global markets. Prices will soar, supply chains crumble, and inflation sparks, right? Leaving businesses and consumers struggling to adapt. The economic aftershocks are felt worldwide, deepening uncertainty and forcing policymakers to navigate an already fragile recovery. And so, to that effect, we have a guest joining us. His name is Ayodeji Ebo. He's the MD, Chief Business Officer of Optimus by Afrinvest. Ayodele, I beg your pardon, forgive me. Thank you so much for joining us. Appreciate you for doing this with us, Mr. Ebo. Let's just get started. Stock markets reactions are differently in times of war. It's very different, right? Case in point, the positive response of the market to the invasion of Iraq in March 2003. Then there was good news for global investors. So in 2022, you gave an analysis of the volatility while seeing investors take advantage of the deep with long-term position, assuming it was going to be a short war. How have those trades panned out over the past 3 years?
Okay, thank you. And to say how time flies, these are 3 years. And the initial idea then was that the war wasn't going to last this long. But what we've also seen, if we look back in the last 3 years, so within that period, there was significant shock and most of the asset classes dipped significantly, and a lot of long-term investors that took position. So if we look at what has happened by sector, so when you look at most of the defense stocks, the energy and commodity stocks have performed exceptionally well within that space. And you would also note that when you look at the US and the European markets, they've also rebounded significantly. But what we've seen when you look at it from the Russian market, so you see a lot of companies had to take significant write-off, like Nike, the Western well, because of the sanction, a lot of companies that had businesses exposed to Russia, they had to take significant write-off, which impacted on those companies. But over time, so those companies have now began to look at other areas they could spread to, and to rather than concentrating on or concentrating within the Russian economy. So I would say that it wasn't really very very interesting times. I think 1 year after that, but since then, this is the third year, we're seeing a lot of improvement in those stocks that are within the energy transition space,
right,
within the defense space.
Right. I mean, what would you say, what would you say are, if any, significant long-term, significant long-term consequences, especially for firms with strong ties to Russia through trade or ownership?
First thing, that the most significant consequence that we have seen is the deglobalization in strategic industries. So you had companies that have strong ties to Russia, whether through ownership or by trade. But most of them had either exited Russia or drastically reduced the operations within that space. So see the European energy firms that they had to write off billions because in Russian assets due to the sanction. But what we've also seen is that the supply chain shifts has accelerated, diversifying across different regions that could also provide that services. They relocated their manufacturing and raw material sourcing to a more politically stable region. Another thing to note is that it has also, the war has reinforced a new economic bloc structure where Russia have had to now deepen their ties with the likes of China, India, and the Middle East, while the Western economies, for most of them, have become more self-reliant in critical sectors like energy, defense, and technology. You know, that reliance was very significant. So what we see there is that there will be more shifts against areas that are more politically stable.
Ayodeji, I must say thank you for taking out the time to join us today. Ayodeji Ebo there from Optimus by Afrinvest to give us a bit of insight when it comes to macroeconomics effects of the Russia-Ukraine war on its third anniversary. Thank you once again.